Okay, peeps, welcome back. So today we're going to be going over the YieldMax ETF dividend distributions, which I guess you would call a declaration date, which is today, and the ex-dividend date is tomorrow, and we're going to go over our new position in SoundHound. So with that being said, let's get it. So let's start with the YieldMax distributions first, okay? So as you guys can see, the posting date here, March 5th, that's today, March 5th, okay? So you guys can see that some of the yields that they have here are just insane. Nvidia is actually more than it was last month, which is not surprising because Nvidia has just been on a tear. It's just been basically straight up, which is kind of crazy. I thought it would have pulled back by now, but then again, Bitcoin also has really been overshooting uh, the bullish narrative as well. So once again, it kind of all falls back to the old adage that is markets can remain irrational longer than you can remain solvent. So just kind of expect things to play out longer than expected. But anyways, the Nvidia yield here you guys can see is 101%, which is the biggest it's ever been for Nvidia ever since its inception. Coney is still pretty good at 75%. AIYY at 70%, AMDY at 69%, and MRNY at 66 or 67%. We do actually have all of these except for AIYY. That is the only one we don't have. So let's get into the yields. So you got 54% on Tesla. Again, that was the reverse stock split, so that's to be expected. 81 cents. If there was not a stock split, it would probably be about 40 cents right now would be my guess. So still pretty good. We are still bullish on Tesla over the next year or two because, again, we had that rare buy signal on the daily. If you guys have not seen that, go back and look at that video where we talk about the basically every time that Tesla is oversold on the RSI and it has a golden cross on the daily time frame on the RSI and the MACD, it leads to a massive, massive rip in the price of Tesla. And that's only happened, I think, 3 times over the last 4 or 5 years, something like that. So it's pretty rare. And we just had one not that long ago, like a couple of months or something. So if you haven't seen that, go check it out. So OARC, we have a lot of this one for multiple reasons. I mean, it's more of an ETF, not like a single stock thing. The ARC Innovation Fund has Tesla and Coinbase in it. And I believe they also own some Bitcoin too with their spot Bitcoin ETF. So that's all very bullish for ARC. So 41%, 46 cents. That's pretty good. 28% on Appley, 41 cents, which is definitely much better than last month. We'll take it. It's a nice little increase. 101% on Nvidia. You guys can see the yield on this thing is just absolutely bonkers. $2.62 per share. We did reduce our position in this, so we're not going to get the full 120 shares worth of dividends. We'll only get about 30 shares worth of dividends, but that's okay because we took a massive amount of profit on Nvidia, which will offset that, which we'll show you guys that this weekend. So AMZ 33%, 64 cents. So that's really good. FP still killing it, 59%, a dollar, basically $1.18. GUI 19%, 25 cents. Google's been kind of a laggard, but we are expecting that one to go up over the next 12 months. That's generally how it works. The laggards are usually the ones to outperform when the outperformers have a pullback. It's just kind of an inversing the market move. So Enflea is 47%. This is going to be about 73 cents. Coney's massive 75%, $1.66. If I'm not mistaken, I think we have about 80 shares right now. Yeah, so okay, so 78 shares. I did not mean to click on that. So let's go back here. We'll just do some simple math. So 78 times, let's see, $1.66. So yeah, that's going to be a pretty good payout. And just so y'all know, we have taken profits on Coney as well on the way up. So there is also that. So 40 cents or 40%, I should say, on MSFT, 76 cents. DSO, 41%, 77 cents. I believe they did reintroduce their dividends, so that's also a plus. You can get double exposure if that's kind of your thing. You can own the Disney quarterly dividend and DSO as well. Zomo is 19%, 27 cents. So that's not bad considering oil has kind of gotten beat down over the last few months. JPMO 28%, 49 cents on that one. That's actually pretty good for the bank stock, considering it's sitting at all-time highs. PYPY, this is PayPal, so 47%, 72 cents. That's really good. Squee, 34%, 65 cents. So not as good as the, I think it was $2 and some cents per share that was at before, but still not bad. So MRNY had actually a massive increase this month, 67%, or $1.13, and AIYY 70%, or $1.06, which is also really good. As you guys can see, they have MSTY here. We did actually pick up some shares of MSTY. Again, they did not pay a dividend this month, which is kind of what we expected. That's been the pattern that's played out over time. Is typically when YieldMax releases one of these new ETFs, it does not pay out the following month or that same month. It usually takes about a month and a half for it to pay out. So, but we did pick up some shares, and main reason being is because we want to hold those shares into the Bitcoin bull run. As you guys know, MicroStrategy has about 200,000 Bitcoin. I forget what it's worth. It's worth like 10 billion or 15 billion or some crazy amount of money. But kind of the idea here is buying into MSTY gives price appreciation exposure off the back of MSTR, which is the underlying stock. So when Bitcoin breaks past its all-time highs, which if I show you guys right here, we'll sorry, it's been a little bit slow right now because I think it's because we have a trade on currently. But as you guys can see, Bitcoin has pulled back, so MicroStrategy is probably going to pull back. This would be, in my opinion, just my opinion, of course, a good time to get into MSTY for the dividend yield, because when Bitcoin breaks its all-time highs and goes to all-time highs like 100, 150,000, 200,000, 300,000, whatever it's going to be, MSTY is going to moonshot because MSTR is going to go up because, again, they have 200,000 Bitcoins. So that's kind of the play here. And also, of course, the higher that MSTR goes up, the higher that the dividend yield is going to be. So with that being said, let's take a look at the portfolio here. You guys can see that none of our holdings have really changed except for Coney. We've added a lot more to this. So that is our position on Coney has actually increased, and we only intend to buy more as the bull run continues. But we're not actually in the parabolic phase yet because we have not broken to all-time highs yet. So keep that in mind. And when I say broken to all-time highs, I mean a bullish confirmation candle on the weekly and or daily time frame to confirm that we have actually closed above 69,000. We're close, but not quite there yet. And there was a pullback in Bitcoin. We'll get into this in a later video, but if you follow us on X, you would see that we told you that we expected this to happen because it happened. It also happened back in 2020 before Bitcoin pushed up to new all-time highs. So anyways, we'll get into that in a later video, but you can see we have 22 shares of NVIDIA, 17 shares of Squeeze, so we're going to get a pretty juicy payout from that. Squeeze only 65 cents, but basically the profits that we took from MSTY and Coney and these others that we took, I think it was yesterday or a couple of days ago, we put that money into Squee because it was kind of just sitting there and not doing much. So we said, okay, let's buy some. So anyways, so we also have shares of MSTY. We can actually go ahead and click on this. You guys can see that our cost basis is pretty high up there. It's $30. Of course, we have made some profits, so the drawdown is I mean, this is not accurate because we did actually make some profit. As a matter of fact, let me take a look at this and pull up the spreadsheet, and I can tell you guys exactly how much that was. So we made $67.80 on MSTY. I think our average cost basis at the time was like $23 or something like that, and it shot up to 30. So we sold out, took profit, got back in. And basically kind of the mindset that we have is, okay, we'll just buy 10 shares at $30. If it pulls back, we'll buy more, which it looks like it's pulling back. So again, the theory that we had kind of worked out. And then that's that. So anyways, that covers the YieldMax ETFs. Now let's go into the SoundHound trade that we just opened up this morning. We do plan on buying more of this, but of course it kind of depends on what SoundHound does. We were thinking that we might get back into this. Reason being is because we just kind of felt like on the last trade that we had that we didn't really get our fair share of the pie, so to speak. I mean, we made money on SoundHound, sure, but the amount of money that we could have made could have been way more if we had been buying when it was at lower prices. So we went ahead and bought 200 shares here, as you guys can see, at $4.87. So what is the reason for doing this? Well, it's quite simple. SoundHound had this huge, massive move up. Massive, I do mean massive, move up from this low here all the way to this high. You almost can't even measure it. It's so big. So it's 400%. Massive, massive move here. And we had a pullback into this previous resistance zone. As you guys can see, this resistance was resistance for a very long time, okay? So this thing had been holding for almost a full 2 years before breaking out of that previous resistance. So it pulled back. So at this point, we're kind of thinking that this range here or zone is going to hold. If it does, then pretty much what we're looking for is for this thing to move higher. The all-time high on this is $18. But considering that NVIDIA has a stake in SoundHound, which I don't know if y'all knew that, but they do. Apparently, they just came out recently and said they have a small investment in SoundHound. I think it's like $4 million or something like that. And as you guys know, NVIDIA is the king of the AI sector and AI chips and stuff like that. So they're not going to put their money where it's not going to make money for them. But it would not surprise me if SoundHound probably, I would say over the next 6 months, went up to like $20 a share. So we're kind of looking to make at least a 3x on this. If it comes down lower, we might buy more. I could potentially see this thing coming down to kind of this zone down here where you guys see between $3.75 to $4, maybe having like a kind of like a wick down or a few wicks down to touch that area, and then it closes back above this current support zone. So as of right now, we're only half into this trade. We'll put the other half in when it makes sense to do so, or if it just goes up, then we'll just simply hold what we have. So this is, I would say as of currently, this is a major buy alert. Again, it is sitting on massive weekly support here. We have had a huge, nearly 40% retracement. NVIDIA came out and stated that they do have a stake in the company. The company is obviously not profitable yet, as you guys can see, but when it does become profitable, and do understand the AI narrative is not going anywhere, okay? AI is only becoming, artificial intelligence will only become more prevalent as time moves forward. This is generally how the doubling of computer power works. It only ever doubles over time. It never goes backwards. It only increases in power. So again, they're not quite profitable yet, but in due time they will be, and then it will essentially turn from a swing trade to a long-term investment for a lot of people. We're just swing trading it, but as of right now, it makes sense. At the very least, this thing could potentially come back and close this gap here between $6 to $6.60. It did close it, technically speaking, on the downside, but if it were to come back up again, it could close it also on the upside before a massive move up. So anyways, this is the YieldMax ETF dividend distributions and also our new SoundHound swing trade. Hope you all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.